market pulse, flows, positioning, and the real signal behind today's move. Welcome back to CryptoScope AI. Today we're not chasing headlines, we're reading the tape. Spot versus perp flows, ETF rotation, open interest, and where liquidity really sits. If you trade candles, you'll stay reactive. If you trade flows and positioning, you'll stay ahead. Let's break it down. Bitcoin is behaving exactly like a liquidity-seeking asset in a regime that's shifting from momentum to mean reversion. Here's the read. Perp funding has been leaning negative flat, while open interest isn't expanding on the dips. That's de-risking, not a fresh short chase. On the spot side, we're seeing signs of absorption near today's daily level. Every time price wicks below the prior intraday low, volume comes in, and perps don't re-lever aggressively. ETF rotation matters. This doesn't look like capitulation. It looks like gross redemptions, early and late session spot demand stepping in. Classic smart money scaling on weakness. What matters next? If price accepts back into the prior daily range while funding stays compressed and OI doesn't re-lever, path of least resistance is a mean reversion squeeze. If we lose the reclaimed level with exchange reserves ticking up and basis deteriorating, expect another liquidity run lower into resting demand. Bottom line for BTC, don't trade the color of the candle. Trade the relationship between spot absorption and perp leverage. ETH keeps flashing quiet relative strength versus BTC on down moves. Why? Spot CVD shows steadier bidding in ETH than BTC during US hours. Institutions often express risk on but controlled via ETH and L2 exposure. Watch L2 activity and bridge flows. When L2s tick up while ETH funding stays moderate, that's a tell that developers and sophisticated flow are active, not just retail momentum. ETH game plan. If ETH holds above the reclaimed daily pivot while BTC chops, ETH BTC can grind higher, a subtle tailwind for selective alt exposure. SOL remains the high beta bellwether. The read is simple. On big red BTC candles, if SOL doesn't make new lows and perp funding goes more negative while OI clears, that's positioning cleaning up, not structural damage. If spot flows and SOL appear on dips, you'll see it in spot CVD diverging from price. The next move is often a reflexive squeeze back to the last imbalance. SOL levels conceptually. Watch the prior daily imbalance above as a magnet if acceptance back into range occurs. Fail that, and a second leg down, hunt stops at the most obvious swing low before buyers re-engage. AVAX is unique because there's a treasury, institutional accumulation narrative in the backdrop. Narratives don't fight the tape short-term, but they tilt medium-term flows. If exchange reserves cool off while order book bids refill into New York close, AVAX can lead a bounce inside the layer 1 basket. If reserves rise and perp basis softens with BTC losing its reclaimed level, AVAX will likely follow the beta lower first, then buyers step in where previous large clusters accumulated. AVAX takeaway: respect the short-term tape. Keep the treasury narrative in your medium-term framework. Here's the professional checklist for the next 24 to 48 hours. BTC, track acceptance back into yesterday's range. Watch funding and OI not re-levering on green. That's constructive for a squeeze. ETH, if ETH BTC trends up while L2 metrics improve, selectively add ETH exposure on dips rather than chase breakouts. SOL, look for spot-led bounces with perps lagging. That setup tends to squeeze fast. AVAX, let the market prove absorption first, then target the prior imbalance as a mean reversion waypoint. Final thought, smart money scales into weakness when perps are discounted and spot is absorbing. Trade the flows, not the fear. You've been watching CryptoScope AI, real-time crypto insights powered by data, driven by logic. If this helped you see the market more clearly, like the video and subscribe so you never miss the next move. This is not financial advice.